Did we stop investing in stocks because there were a lot of scammers in, the 1920s? No. How about in the 1970s when we had the savings and loan crisis and, I guess it was 1980s and a savings and loan crisis and, we stop investing in stocks? No. Or how about the global financial crisis when the big banks, right, the banks that we trusted were scamming us with CLOs and CDOs and slicing and dicing, the big short. Nope, we didn't stop. Yeah. And yet when people talk about crypto, they're like, oh yeah, you had a bear market last year. Like, yeah. And year to date, this year, it's up almost 100%. And it is again for the 11th out of 14. It's only been in existence for 14 years. Bitcoin's only been an asset for 14 years. And 11 of those 14 years, it's been the number one performing asset.
Founder and CEO of crypto hedge fund Morgan Creek Digital, Mark Yusko, are sticking to his prediction that a digital asset bull market is imminent. Yusko says that his call for a crypto bull market to begin this month is a little premature. The Morgan Creek executive now believes that a crypto summer will likely kick off in mid-June. According to Yusko, Bitcoin is now in a position to ignite a big breakout as it prints a technical reversal pattern. Yusko's optimism isn't unfounded. His bullish outlook is partly based on the current market performance of Bitcoin. Despite the digital currency's flat performance over the past 12 months, Yusko sees a potential reversal pattern, which he finds intriguing. In the wake of multiple regional bank failures this year, Yusko offers an intriguing perspective. He believes this turmoil in the banking sector might have been deliberately orchestrated to pave the way for the seamless adoption of a central bank digital currency. While bank failures would typically incite panic and potentially trigger a Bitcoin crash, the cryptocurrency has instead demonstrated significant resilience. This, according to Yusko, suggests a broader narrative at play. Let us now get into the video as Yusko replays the bank crisis, its historical resemblance, and how he thinks it's been orchestrated in the background by some people. He also throws light on the dangers of the CBDCs and how Bitcoin solves this problem.
The banking crisis, remember Yellen, like 4 or 5 years ago, said there'll never be another crisis in her lifetime? And then someone joked and they said, well, she's almost, expired anyway. Like, well, okay, that's not very nice, but okay. But I mean, just clearly silly, right? I mean, it's cyclical and, as sure as the sun sets and rises, there was going to be another financial crisis. And we have one going on. The more people say it's contained or it's over, the more it's not, right? So, first you had Yellen say it wasn't going to happen. And then it happened. Then you had Powell say, well, it's totally contained. And then 2 more banks failed. And then you had the president say, definitely perfectly healthy. Everything's good. Nope. So, because what hasn't happened yet is the loans. So the first thing that happened is the banks had the crisis in 2009. And what happened? Fed lowered interest rates to 0 and said, all right, we'll re-liquefy the banking system by lending you money, okay? And you take that money, so we'll lend you money for 0. You take that money and you buy bonds, okay? Government bonds. Okay, now why would they do that? Well, because it was a free arbitrage, right? If you borrow at 0 and you get paid 3, you can lever that up 10, 11, 12 times and you make a lot of money. In the early 1900s, this thing called Knickerbocker Trust started to really surge in New York. And there's a famous quote that JP Morgan himself said, I like a little competition. And he spread a rumor that Knickerbocker Trust was bust. And if you go to Wikipedia and you look at the picture of bank run, you'll see the picture of the Knickerbocker Trust and the, people with their umbrellas and their top hats and, running to the bank. That's a bank run. And Knickerbocker Trust went bust and JP Morgan had to personally guarantee the banking system along with John D. Rockefeller. And then he magically got to buy, because of the 1907 Trust Act, these assets for pennies on the dollar, and so much for the competition. So again, what's happening now? A bunch of these small banks that serve entrepreneurs and crypto suddenly get big, right? Second, third largest banks or 4th, 5th largest banks in the country. So JP Morgan gets pissed off because now they're real competition. So what happens? Now, again, it wasn't JP Morgan this time, but somebody or some buddies spread a rumor that these banks were in trouble. And And unlike the old days where there had to physically be a run, like I had to get out of the office, go in my car, go to the bank, stand in line. Now you just push a button. $42 billion vanishes from Silicon Valley Bank on a Friday and they're bust. And on Sunday, they get taken over. Okay. Then it happens with Signature Bank. Then it happens, Silvergate was first, then Signature Bank and Silicon Valley Bank. And and then the last one was First Republic. And okay, well, wait a second. Well, who bought First Republic? Oh, JP Morgan.
From its peak of $60,000 to its subsequent dip to $27,000 and eventual downturn to $15,000 during the FTX debacle, Bitcoin's trajectory appears to have carved out a distinct inverse head and shoulders at $27,000. This pattern, a classic technical signal of a potential bullish reversal, suggests a large-scale breakout could be imminent. According to Yusko, Bitcoin has been the best-performing asset even amidst the global financial meltdown. When compared to gold, Bitcoin has also stayed on top while gold is barely hanging on. Yusko further comments on the CBDCs and why it is disastrous to accept such financial imprisonment.
Crypto is opt-out, right? It's an opt-out mechanism. It allows you to opt out with a portion of your wealth from the fiat fiasco. What is the fiat fiasco? Well, following the Knickerbocker Trust debacle in 1907, John D. Rockefeller and JP Morgan concocted a scheme with John D. Rockefeller's father-in-law, Amory Aldrich, to launch the Federal Reserve. But what was the Federal Reserve? Okay, the Federal Reserve was a plan to create a federal, not government, but a private corporation. This is the funny thing. The Federal Reserve is neither federal nor has any reserves, right? It's not a government entity. It's not owned by the government, and it has no reserves. It's not a bank. It is literally a private corporation modeled after what? Modeled after the Bank of England, which is modeled after what? Modeled after the Netherlands National Bank, which was created by the Rothschilds in 1607 to create money out of thin air, to finance wars. So we have this weird dynamic that the Fed exists to steal the wealth of the masses through this thing called inflation. Inflation is not good for us. So what happened? So all of the graft and corruption of the savings and loan crisis and the first banking crisis in the 90s and the second banking crisis, global financial crisis in 2009. So January 3rd, 2009, Bitcoin is born. Now, why was it born on that day? And why is the first image on the Bitcoin blockchain in the Genesis block a photograph of, or JPEG, of the Financial Times, Chancellor on the brink of second bailout for banks? Well, that is, again, a commentary, social commentary on why Bitcoin needed to be created. It needed to give us a way to take our fiat, convert it into something that is no longer inflationary, can't be devalued because there's a finite supply, it's scarce, and that deflationary asset allows us to protect ourselves against this fiat fiasco, which means we can create fiat out of thin air. So fast forward to today, what are the implications? Well, the banks reliquefied themselves. Then these other competitors rose up and they were threatening the guys at the top again. So what do? They foment fear and create a reverse bank run. So all the money flows back up to the top banks. Why? Central bank digital currencies. Well, what's a central bank digital currency? Central bank digital currency is not Bitcoin. It's not Ethereum. A central bank digital currency is a closed, centralized ledger that is a surveillance tool and a control tool. So it's all the worst things about fiat money, inflation oriented, can be devalued by decree, plus programmability and control. I mean, it's a living nightmare and surveillance. And so there's this crazy video by Augustin Carstens. He does this video. He's the head of one of the guys at the BIS. I don't know if he's the head of it. And he says, well, of course, we should control how you use your money. Of course, we should be able to put an expiration date. Imagine that. You get paid for working your ass off, and the money, if you don't spend it by Friday, it goes away. Are you kidding me? I can't save my money. Wow. I have to spend it. Well, why would they want to encourage that? Because consumption is what drives economic growth. It's what drives the money to the top of the pyramid. So, Here's the thing. Bitcoin has held up, as you said, really well, right? We got the second and third largest bank collapses in history, and Bitcoin's up. Now, if you would have told me 6 months ago that two of the largest banks in America are going to fail, what's going to happen to Bitcoin? Everybody would have said, oh, it'll be down 50%. It'll go to zero. Peter Schiff would have been saying, oh, it'll definitely be zero then. Okay, Peter, here's the thing. Over the last 10 years, gold is down. And Bitcoin's up about 10 years. It's like 850%. So gold is down and Bitcoin's up 850%. So something's, broken in that model, but the money keeps getting worse.
The fearful implications of CBDCs are rooted in their capacity to track all transactions tied to an identity and to be able to block any undesirable monetary behaviors by users. Unlike cash or decentralized cryptocurrencies, detractors often point to the potential for malevolent implementations of the technology in China as an example. It appears Yusko suggests that the alleged plan is to allow an erosion of confidence in the banking system, leading deposits to funnel into the largest institutions, which can be controlled at the government level. Now in the crypto world, the DAO handling operations, funds, and plans of privacy-focused crypto mixer Tornado Cash were effectively taken over by an unidentified attacker or group of attackers on Saturday. Meanwhile, the Bitcoin-focused payments firm Strike is expanding its app to more than 65 countries from the current base of the US and El Salvador. Strike CEO Jack Mallers announced on Friday at the Bitcoin 2023 conference in Miami Beach, Florida. The Strike app uses Bitcoin and Lightning, a secondary network for cheaper and faster Bitcoin transactions, to offer global payment and cross-border money transfer services. The app now supports a brand new user interface and also gives users the ability to hold funds in Bitcoin, BTC, and Tether, USDT. Strike says the expansion will increase its total addressable market to almost 3 billion people. Our end goal is to address the 7 to 8 billion people in every single country, said Manuela Rios, Strike's vice president of product, in an interview with CoinDesk. Rios says the app's new user interface will feature a seamless onboarding experience, something she said the company has been working on for years. With ordinals and the BRC20 token, Bitcoin has generated even more exposure in the past few weeks, and the use cases for the Lightning Network have skyrocketed as well. This is a classical bullish signal as more adoption drives even much bigger growth. What do you think would be the price of Bitcoin by the end of the year? Let us know your predictions in the comment section below. Don't forget to like this video, subscribe, and turn on notifications. Thanks for watching.